Okay, here we are, and don't forget that we are on the earnings season, so this coming week is going to be Nvidia, Tesla, and many other companies.
So with that, I see you on the other side.
Okay, here we are. It's Friday, October 18, 2024. We're going to be talking to Kathleen Griffith from Austin, Texas. She's a retail live show in Austin, Texas, but she's going to be talking to us on the phone. So, Kathy, you have it. Let us know what's going on in the market this evening.
Good evening, Roy. The Dow Jones surged near 300 points to a session high following Tuesday's sell-off. The Nasdaq and S&P 500 advanced, although the Nasdaq 100 lags behind its peers. Semiconductor stocks suffered a blow, with over $300 billion in losses, after a Dutch semiconductor company reported a disappointing outlook for next year. Earnings season week continues this week after a positive earnings season from banks, setting the stage for upcoming tech sector earnings expected to boost U.S. indices. Political tensions continues, creating uncertainty in global energy markets, and although oil remains resilient, there is no telling how this will work out if Israel take more dramatic action. How price oil be impacted? Bitcoin surged to a 2-month high following significant ETF inflows. Meanwhile, Tesla supposed to transfer near $7 million worth of Bitcoin to unidentified wallet, and this how it should be peer-to-peer, raising speculation regarding its crypto holding strategy. Treasury yields fluctuated, with the 10-year yield drop to 4.01% as the market continues to consolidate in anticipation of Federal Reserve rate decisions. Mr. Idrach thinks it is more likely no rate change this month, but some analysts expect a 25 basis point cut.
Good evening. Today is Friday again, October 18th, 2024, and here we are for the tick by tick. So we can have what happened on the market this week and what we expect to happen next week, starting Monday. By the way, you can see on the back of me a video going on, and this is a special video that I'm going to have for you. I have a question that a young lady from Dallas, Texas wrote to me. What is day trading? So I asked her what type of day trading, and she said, well, she didn't know. She just said day trading. I said, well, there are many types of day trading, but there's one that is very serious and dangerous because it affects every trader in the business. I'm a day trader myself, and I specialize in option trading. That's what I've done for the last 5 years. However, that's what is called high-speed trading. And for many years, I have complained about this because it do not make the playing field, the field playing equal to everybody. I had talked to elected officials, I had talked to people in Congress, and they all tell me they're going to look at it, I'm going to look at this, we'll see what happened, but nothing get done. And I can see why, Politics is something else, and I'm not in the business of politics. So what really happened is that you can get a computer that do the trading for you at a fraction of 1/100th of a million. That is very, very fast. On a blink of an eye, this thing can see 1 million trades. That's what it called 1/100th of a million. Now, this is what happened. When I submit my order on the internet, the order goes in and this computer catches it before it hit the exchange, before it hit the computer at the exchange. So I might put a market order and say, whatever the price is. So they see it and they say that the stock is trading at $21. They buy the stock at $21 and immediately resell it for $20.15. It hit the market, so they made 15 cents on that trade. Now, many people had told me, but Roy, what is about 15 cents? That's not even worth the time. He said, what you don't understand is that millions of shares are traded, and that's a lot of 15 cents. This is where some guys can make $1.2 million an hour. But if I make $3,000 in 50 minutes, people come, oh my goodness, how you do that? He said, dude, I'm just trying to mimic them, but I have to do it by hand. The secret of it is that this computer has to be connected, hardwired, not by internet, hardwired into the exchange computer. Just imagine that. That's a great advantage over the regular guy and anybody else. You don't stand a chance against this computer. And we're not talking about artificial intelligence yet. That's another story coming soon that we have to deal with as a trader. So remember, I'm a day trader. I just work with whatever I got at that time. We don't care whether the price is going up or down, just that I am in the right direction that the price is going. However, I know for the fact that when I submit an order, a computer can catch it, buy it, and then resell it immediately in a fraction of a second. Because my computer is in Texas, I'm not in New York, and I don't have the money that it requires to pay to have those connections. This thing can cost $10,000 a day, just to have the computer connected direct to the stock exchange. So with that, this is what you see in the background. And today, if we have time, we're going to put that in. Next week, we're going into the second part of Bitcoin.
Okay, here we are. It's Friday, the 18th of October, and we're going to start checking the different sectors and indexes. And before we see the video about stock market and speed trading. So with this, we're going to start with French stock market is flat, and the Nasdaq continue going up, almost getting ready to break more records again. It's amazing how this market has been trading, but we cannot help it. We expect the Mason market adjustment, and it's not happening. The German stock for Germany is still moving higher, just as it does in the States. And of course, we got the Dow Industrial average that is almost 42,924. And the S&P 500 is the same. It keeps on going above 5,500, 5,800. So it's at 5,700 almost. And then the American Composite Index is also the same way. So everything is still trending up. So let's start with the next one. Let's take a look at the sectors. Communication service continue in the same direction, moving above 90. We also have energy. Energy is still struggling, but the way things are going in the Middle East, this might don't last if Israel do something before election. This can be catastrophic. So we'll see how this goes. The financial spider, sector, banking, you keep on moving on and much higher also. The industrial sector, you just don't know when to stop. It's been going over $20 in less than a month. And the technology sector is just about getting close to the new high. It's been moving from $210 to $230, $20 in less than a month. And of course, consumer staple is struggling. Maybe people losing their job, or because of where they spend the money. Real estate, they're having problems. It's been going almost for 5 weeks, and it's because we don't get in as many buyers as they were getting before. new loans. Even though the government had lowered the interest rate, it had not helped this sector. Price of housing keep on going up, materials keep on going on up. This is due to logistics, how to get the material to the site and bring it into the country. Utilities, of course, this keep on going, and some of these companies have to do with uranium, and they're doing very well. So with that, let's healthcare. Healthcare, this is slowing down also. It haven't moved in a month. It has dropped, not a whole lot, but more people coming online that are older, and of course they're going to need service. Consumer discretionary is flat, so people counting the dollar and not traveling as much as was expected before. So that's a sign that maybe we don't want to buy a car this month, and they're going to probably, automobile sales for new car sales probably going to start dropping. Take a look now at the major markets. And oil continuing way down, but like I mentioned before, if something happened in the Middle East before election, that might change, the market might turn around. Nasdaq is part of this component. Gold keep on his trajectory, breaking new records again. You know, it's just moving and getting close to $2,800. But like I mentioned last week and a few weeks before, we need to be careful when this angle get almost 90 degrees, and something might happen that initiate a sell-off. So even so, it's oversold. Seems like nobody cares. And we're looking at 40-year history here. And you know what happened with price drop? It take a big dive and it's painful. So I don't think this is the time to buying a stock. Buying gold. But you know, it's just my opinion. This is not an advice, as you all know. And Dow Jones Industrial continue the same thing. Candlestick, like crude oil, same way, down. And for the next one, S&P 500. It's part of this sector also. And the American index is doing the same thing. So let's see what is next. All right, let's start with commodity. Copper, it continue go down, and of course, as you know, copper is a main thing for wiring, especially in housing. Housing is slowed down, you need less virgin copper. So that's another thing that is taking place. Gasoline is almost $2, and by the time they put the tax on it, you're going to pay 50 cents a gallon for federal tax, and sales tax is any, so you might be paying $2.40, but gasoline is down and oil prices are down. Gold, you can see part of this also. He continued his trajectory, moving higher and higher, but remember what I told you before, this is a short term here. It's not a 40-year chart. This is just a couple of years, so a little more easy to see. But we're getting signals that we might not be moving as we see here, and this is getting flat. So we might have a situation where it's time to take a breath. Hitting oil, if the weather starts changing, then the price is going back up. Natural gas is the same, still below $2.25. Silver making new highs at over $34. And remember what I said about the Hunt brothers, but so far it don't seem like nobody is cornering the market. But the ratio of silver against gold is extremely far apart. It used to be like it would be $300 in gold and $30 in silver, or $500 in gold, $35 in silver. Now we got $2,700 in gold and silver, seeing like it not matching the previous ratio that was before. And I guess that's because the other form of investment, so people don't look much at silver as a good right thing. Sweet oil, Texas crude, West Texas intermediary is about $70, $72, still the same. Gold spider is about $250, and the silver trust is about $31. This is trust that operate just very close to the same price of silver. United States gasoline, 62, and United States natural gas is still continue down. With that, we finish with commodities, and let's see what. Right, here come the good one, crypto. Crypto making new highs. Let's keep on moving in the right direction. So, crypto Bitcoin Cash is at 350. This is Bitcoin Cash. This is not the other Bitcoin. So Binance is at 600. Haven't moved for a while. And here we got now Bitcoin to US dollar. As I mentioned a few weeks ago, we expect Bitcoin to go to $125,000 in 5 years. However, analysts now thinking that before the end of the year, we might see $80,000 on Bitcoin. That's amazing. And as I told you before, we now are invested, and we got a new video coming up about crypto, and it's going to be very important because you're going to learn a lot with this one. So with that in mind, I think we just got about that. Dogecoin is still at 14 cents, and we actually concerned and concentrate on Bitcoin because this is the future. Bitcoin is the future, and things are going to change. One little secret that I expect that's going to happen: ATM machine business, they're going to start disappearing. We're going to have more peer-to-peer payment to avoid paying the fees that you get through the banking system. And Bitcoin is the right payment for that because it's a very little amount of cost or nothing at all on this transaction peer-to-peer. And we don't have nobody getting your information. When you use a debit card or anything like that, that could be sold, and people start then hijacking your account. So just make sure that when you use Bitcoin, you just have the code and don't share with anybody, because first one to use the code get the money, and you cannot get your money back. It's lost. So with that in mind, let's move into our high-speed trading, so you can learn about what's going on behind a transaction on the stock market.
It may surprise you to learn that most of the stock trades in the U.S. are no longer being made by human beings, but by robot computers capable of buying and selling thousands of different securities in the time it takes you to blink an eye. These supercomputers, which actually decide which stocks to buy and sell, are operating on highly secret instructions programmed into them by math wizards who may or may not know anything about the value of the companies that are being traded. It's known as high-frequency trading, a phenomenon that swept over much of Wall Street in the past few years and played a supporting role in the mini-market crash last spring that saw the Dow Jones Industrial Average plunge 600 points in 15 minutes. Most people outside of the industry know very little, if anything, about it. But the Securities and Exchange Commission and members of Congress have begun asking some tough questions about its usefulness, potential dangers, and suspicions that some people may be using computers to manipulate the market.
The story will continue in a moment.
For 150 years, the floor of the New York Stock Exchange was the center of the financial world, the economic engine that helped American business raise capital and create jobs. Today, it's still the public facade of Wall Street and a television backdrop for reporters relaying financial news. But less than 30% of the trading is conducted here now, and the specialists and the noise of the floor is being replaced by the speed and quiet efficiency of computers, and the action is moved elsewhere. There are now more than 80 alternative trading systems around the country, plus 2 brand new electronic stock exchanges, which most of you have probably never heard of, BATS and Direct Edge. They're owned by the big banks and by high-frequency trading firms, and neither of them would give us an interview or let us inside to film their operations. But they trade more than 1 billion shares a day at blinding speed, and most of those bets are being made by machines. The players range from firms like Goldman Sachs, Barclays, Credit Suisse, and Morgan Stanley to hedge funds and smaller operations like TradeWorks, which is the only high-frequency trading firm that would talk to us or let us in. It's run by Manoj Narang and a small group of mathematicians and scientists called quants, which is short for quantitative analysts, and their high-speed computers trade 40 million shares every day. Are humans ever involved in the trading?
Humans are not involved in the trading because humans are way too slow to trade on the kinds of opportunities that we're trying to capture. We're trying to capture opportunities that exist for only fractions of a second. The stock over here was down 1.8% for the past week.
The TradeWorks computers don't care where a stock is going to be trading next year, next month, next week, or even tomorrow, because they're going to be in and out of it today in a matter of minutes. What's the point of buying and selling a stock that you hold for 3 minutes?
It's the same objective that all other participants have in the market, is to make money. You buy low, sell high, that's how you make money.
And the computer will know when to buy and when to sell?
Sure, the computer is monitoring real-time data, and it knows what to do with that data and how to make decisions based on that.
What Narang and other high-frequency traders tell their computers to do is to make a profit of a penny or less 40 million times a day. They scan the different exchanges, trying to anticipate which direction individual stocks are likely to move in the next fraction of a second, based on current market conditions and statistical analysis of past performance. But the computers have no real understanding of who these companies are and what they do. So it doesn't really know whether a company is well managed or whether...
Not at all.
And it doesn't care?
It doesn't know who the CEO is or what that CEO's background is, doesn't know the management team,
whether he's going through a divorce.
Exactly.
Whether he's just been sued for sexual harassment.
Right. It knows information that you can quantify about the company.
It's all math.
It's all probability and statistics, saying a procedure that you can define precisely.
The trading instructions are programmed into the computers with complicated mathematical formulas called algorithms. Narang showed us how it works with a simple, hypothetical example he uses for demonstration purposes.
I'm going to test a strategy where if a stock went down 5% for the past week, I'm going to buy $5 of that stock. And if a different stock went up 10% last week, I'm going to sell $10 of that stock. And I'm going to do that for every stock that's in my tradable universe simultaneously.
Which is how many?
Which is over 4,000 stocks, about 4,500 stocks.
The strategy, which could only be successfully executed with a high-speed computer, would result in almost as many losing trades as winners, but over the past 8 years would have produced a tidy profit, something that Narang and other high-frequency traders have gotten used to. And how successful have you been?
We've had 2 or 3 days in a row where we lose money, but we've never had a week so far where we lost. We've never had a month that was a loser for us.
Just 4 years ago, high-frequency traders accounted for 30% of the stock trades in the U.S. Today, estimates range as high as 70%, and institutional traders like Joe Saluzzi of Themis Trading LLC have come to believe that the game is rigged.
How can you make money day after day? There was even one firm that said they made money 4 years in a row, every single day. Well, you have to be getting information that other people don't have. Otherwise, statistically, that's an impossibility.
Actually, high-frequency traders are getting the same market information that Joe Saluzzi gets. They're just getting it a little bit sooner. It's only a few fractions of a second sooner, but if you're running supercomputers, Saluzzi says, it can be an eternity. What you're saying is the people with the fastest computers have an advantage. They get the best deals.
Every time. Absolutely. There's no doubt about it. I mean, if they're spending that kind of money and they're using that type of infrastructure, they're doing it for a reason, and it is to get a speed advantage in that respect.
It's not just the speed of the supercomputers that's important, it's also their physical location. The closer they are to the stock exchange's server, the quicker they'll be able to get critical market information.
Well, this has been in the works for at least 4 years at this point.
Larry Leibowitz, the chief operating officer of the New York Stock Exchange, believes its massive new data center in Mahwah, New Jersey, will help the exchange regain some of the market share it's lost to electronic trading platforms. And he's busy persuading traders to lease space in these stark black boxes for their supercomputers. This is one of the pods?
This is one of the pods. This is the nerve center.
It's called colocation, a service that high-frequency traders will pay tens of thousands of dollars a month for, and includes access to raw data from the exchange that is almost instantaneous.
You know, we're getting down to, how fast can the electrons travel at this point.
They can predict the price of a stock before you can because of the speed that they're using.
So they actually see the trades before you do?
They can see order flow coming into the exchanges before a regular person off of, say, a Bloomberg or somebody who doesn't have the co-location, the data feeds, and all the other sophisticated technology that they employ, which is not cheap, by the way. It's extremely expensive to set these things up.
How much faster do they see it?
It could be a few milliseconds.
How much of an advantage is a couple of milliseconds?
Millions, if not billions of dollars a year.
That edge, Joe Saluzzi claims, has made high-frequency traders the new insiders on Wall Street, and he says he spots signs of predatory behavior every day. Saluzzi, who trades large blocks of stock for institutional investors, says the supercomputers are programmed to place and then cancel thousands of orders a second, trying to sniff out which way a market is moving in order to jump in ahead of big rallies and sell off before big declines. He calls them parasites who exploit a technological advantage to suck money out of the market and add no value. Does it raise capital for companies?
Absolutely not. If anything, it's distracting from the capital raising process.
Do these high-frequency trades have anything to do with market fundamentals?
Valuation is irrelevant. It's all about just moving the price up and down the ladder all day long. Each day is new. Each day starts fresh. So you have to question the true valuation of the markets now.
Larry Leibowitz of the New York Stock Exchange says there is absolutely no evidence that small investors are being hurt by high-frequency trading. Most of them, he says, don't care about pennies when they're buying and selling stocks, and they're in it for the longer haul.
Look, there's always been charges for as long as trading has existed that people are front-running orders, manipulating stocks. This is nothing new. I think now you add to it the mysterious element of the computer, and it makes people even more mistrustful.
Leibowitz and other proponents of high-frequency, high-speed computer trading say it's performed a valuable function, tripling volume, reducing stock spreads and transaction costs, and providing liquidity to the markets.
Liquidity means that if you want to buy or sell a stock, you could do it right away, and you could do it at a fair price. That's what liquidity means. And without short-term traders, there is no liquidity.
Traders like Manoj Narang say their presence in the market is making it cheaper and easier for everyone to buy and sell stocks. But regulators and lawmakers like Senator Ted Kaufman of Delaware have other concerns.
Clearly, liquidity is way up. But what I say is liquidity is always trumped by transparency and fairness. You can't have fairness if you don't have transparency.
Senator Kaufman, who has both business and engineering degrees, says he's a big fan of technology, but he thinks it's gotten way ahead of financial regulators' ability to monitor it. Right now, it's not even possible to determine for sure who is making high-frequency trades or what they're telling their computers to do.
We don't not know what's going on inside those boxes. There's all types of allegations about what's going on inside there. And basically what can happen is you can have these meltdowns where you can have a computer just go crazy and cause all kinds of problems.
Come on. Which takes us back to the mini crash on May 6th and one of the scariest rides in stock market history, when the Dow Industrials plunged 600 points for no apparent reason. Turns out it was triggered when a mutual fund's computer dumped $4.1 billion of securities on the market in a 20-minute period, which were then gobbled up by the computers of high-frequency traders and sold almost immediately, sending other computers and traders heading for the exits.
The events of May 6th scared people. I don't think there's any question about that.
SEC Chairman Mary Shapiro had already proposed rule changes before May 6th that would allow regulators to track and tag high-frequency traders, and she is now considering further measures.
Are you comfortable with computers making, 50 to 70% of the trades on Wall Street?
One of the concerns is if one goes wrong, if it operates in an unexpected way, given market conditions, what's the impact of that algorithm that has behaved in an unexpected way on lots of other investors in the marketplace?
And Chairman Shapiro says it's happened since the May 6th crash, after circuit breakers were put in place that automatically halt trading in a stock that moves more than 10% in a 5-minute period.
A number of times that those circuit breakers have been triggered has been because an algorithm operated in a way nobody intended for it to do, causing a stock price to go wildly out of range.
The crash contributed to the crisis in confidence on Wall Street. Since last spring, people have pulled $70 billion out of mutual funds. And the biggest concern of Chairman Shapiro and Senator Kaufman is that average investors have lost faith in the integrity of the system.
Is that correct?
Yes, that's true. Correct. And I'll give you an example. When I was at Wharton, a professor came to me and said, there's a river of wealth that runs through this country. He says a very small number of people know that it exists. Some people can stand on a high hill and see it all from the distance. Some people can get up the edge, and there's other people that are swimming in it. That's the perception American people have about what's going on Wall Street right now. They believe there's a small number of people who are swimming in this river of wealth.
And there are a lot of people out there who think that the stock market is rigged. Rigged in the sense that there are people out there who have advantages, the insiders,
Right.
the big companies.
Yep. And I think that we have to do a better job of first, obviously, making sure it's not the case, but we can't be evasive about it. We have to make changes that make sense, that give people more confidence in the market, add more transparency, and make people feel like this is a place I can trust my retirement savings to.
Okay, guys, here we are now. Now you know about high-speed trading, and you know that you need to be careful what's going on out there. So don't forget that next week we got earnings to report. So be on the lookout for NVIDIA and be ready for next week a special presentation about Bitcoin. We see you next week. Have a good evening and good happy trading coming Monday morning.